Hello, this is Matt on the Moon Lambo channel. So look, the contagion, as it's being called widely in the world of crypto, may be over in terms of what triggered the massive financial fallout collapse of all sorts of firms, including cryptocurrency exchanges and what are effectively crypto banks. Fine, the contagion may be over, but in a matter of days, we'll have numbers that show whether or not we're in a recession. The news is likely to be bad, and it's possibly the case that markets will react negatively, including crypto markets. That may end up being the case. We're supposed to have that information in just a few days. So I want to talk about that as well. But here you have the headline from the Daily Hodl. $2.2 trillion banking giant Citi, so they're talking about Citigroup here, says crypto contagion has likely passed. Report. So I want to share with you that and a couple other things here. But before going further, I do want to be clear. I do not have a financial background of any kind. I am not offering financial advice. And you definitely should not buy or sell anything because of anything I say or write. I'm just an enthusiast who enjoys making YouTube videos about crypto-related topics, but just as a hobby and just for fun. So all of this right now that I'm discussing, these are bigger picture macro things, but everything's moving together. I say everything. Markets in a general sense are moving together, if I have to get a little bit more specific here. That does include XRP. If you want to know what's going on with your XRP, these are the things that you need to know big picture. Obviously, of course, you can get more on a more granular level of what's happening with XRP specifically. You could talk about the SEC versus Ripple case. But in a general sense, with how mature markets are, XRP, broadly speaking, it's just moving along with the rest of crypto anyway. That's what it's done almost the entirety of the time that I've been in the space, which this November will be 5 years, actually. One of the only exceptions to that actually is when the SEC sued Ripple, claiming that XRP was an unregistered security of Ripple, and then that caused panic. Outside of that, not so much. XRP price down to 33 cents. You can see markets are in a bit of panic today, but if you've been following my channel for the last few days, you'd know that a number of analysts said that it was possible that we could be seeing some sort of drawdown to roughly where we are, frankly, but that more likely than not, even if that happens, which would be expected, it's not, you'd more likely not move to the upside. It doesn't mean necessarily we're going to $10,000 Bitcoin. That's what the analysts are saying that I've been following myself, and I've highlighted a number of their perspectives on my channel. As I record this, Bitcoin is just over $21,000. Market cap for the asset class, $985 billion. So unfortunately did dip below that trillion mark, but hey, it is what it is. Bitcoin dominance at 40.84%. And the crypto fear and greed index, here, is this... Why am I at the bottom? Why did it take me to the bottom? I don't know. People freaking out more. That's at 26 out of 100. Yesterday it was at 30 out of 100, but no one's surprised, right? This updates once every 24 hours, and prices have been going down. So not exactly surprised to see this. Now, if you look here, there is a chart on your screen. So the comment associated with the chart on your screen is from last night, but first I want to read a tweet from the same guy from July 22nd. And he wrote, Bitcoin, and this is from, again, July 22nd, volatile week ahead. Most will likely be taking profit or de-risking, expecting a small sell-off, which is a healthy correction, he says. Once we find a new support, it's time to reload, and most likely the last dip before we see $30,000. Most holders should be accumulating/holding. So there you go. So that was his perspective from just literally 3 days ago. He was warning, hey, there's probably going to be a drop. We've been running up a bit. Corrections are healthy. There's a good chance, he says, might be the last time you see a correction to the downside of these levels, though. It's not a guarantee. But after that, yep, ultimately moving up to the $30,000 region. And he's been saying stuff along these lines for a little bit. And then last night he tweeted out the following, as prices were starting to come down. It's only gotten worse since then, but it's in line with what he says. This is what you should expect. He wrote, first buying dip opportunity just been hit. Been a very predictable week, and the next one will be just as predictable. And you can see on the chart here from last night, he's indicating that the buy the dip region for him anyway is anywhere from 21,000 to 21,750-ish, somewhere around there anyway. And then there is this, also from chart analyst Income Sharks. And he shared a little screen grab from the official White House website, and he wrote the following. When the White House changes the definition of a recession before GDP numbers come out, you know they are already bracing for impact. Nothing like changing the goalposts. Shorts are loaded for this week. So, and here's what's written on the screen. I'll read you the parts that he highlighted. I'll just read the whole thing, whatever. What is a recession? Again, this is from the White House website. What is a recession? While some maintain that 2 consecutive quarters of falling real GDP constitute a recession, that is neither the official definition nor the way economists evaluate the state of the business cycle. Instead, both official determinations of recessions and economists' assessment of economic activity are based on a holistic look at the data, including the labor market, consumer and business spending, industrial production, and incomes. Based on these data, it is unlikely that the decline in GDP in the first quarter of this year, even if followed by another GDP decline in the second quarter, indicates a recession. So folks, don't believe your lying eyes. What you're seeing at the pump, all the increases, all the inflation, none of that. You lost your job? It's nothing to see here. So a lot of what they're citing here is not in line with reality, but is what they're saying true regarding the official definition of recession? Well, who has been granted the power to determine the official definition of recession? Well, they cite here that it's broadly accepted, but nobody appointed this organization. It would be the National Bureau of Economic Research. It's what's on your screen right here, NBER. And so a lot of people tend to look at that, but that's not what most people cite. Like most economists, I mean, just you've lived your life, right? If you followed this, then you'll know what I'm saying to be true. And if you haven't followed this, that's fine too. But if you've been following just in your adult life, what constitutes a recession? It's almost universally accepted that the metric you're looking at is GDP over a 2-quarter period. That is it. In fact, so take a look at this Forbes article, What is a Recession? That's why as I go through this, it's not like I'm surprised. I get it, like, whether it's Democrats or Republicans in charge, like they're going to spin whatever situations that it looks more favorable for them. That's all that they're doing, though. But I want you to know the real numbers. So I'm not saying this to pick on Democrats. It's not the point of this. This is more of a crypto and a channel where, of course, I'm happy to talk about finance. It's all intertwined. That's the reason that I'm highlighting this, not to pick on a political party. That is not the purpose of this. I just want to inform you. But it certainly does appear to me that what they're doing here is what you'd expect a political party to do. They're spinning the situation. Things are bad out there. And so we'll see what the NBER ultimately says. But even under their own standards, I mean, they'd be hard pressed to not call this a recession, immediately or very soon hereafter. But take a look at this. So here's an article from Forbes, and it's titled, "What is a Recession?" During a recession, the economy struggles, people lose work, companies make fewer sales, and the country's overall economic output declines. The point where the economy officially falls into a recession depends on a variety of factors. And listen up, because this is where the rule of thumb comes in, the 2-quarter things, which I always talk about, because that's what people talk about. People are not talking about the NBER and their wishy-washy definition. Like they say, even calling it a definition, it's so subjective. I don't even know how the NBER calls their definition an actual definition. It's so subjective. And you can interpret things so many different ways. It's like, oh, we feel a different way. There aren't specific metrics. There's a reason that people go by what I'm about to read you. So check this out. This is the important part. In 1974, economist Julius Shiskin came up with a few rules of thumb to define a recession. The most popular was 2 consecutive quarters of declining GDP. A healthy economy expands over time, so 2 quarters in a row of contracting output suggests there are serious underlying problems, according to Shiskin. This definition of a recession became a common standard over the years. Okay, so pause. So even if you go by different metrics, which are more wishy-washy under the NBER, is what was just stated there, is that untrue? If you have 2 back-to-back quarters with negative GDP, is that not something that's alarming? Because according to the White House, that doesn't mean that we're in a recession. We shouldn't even be looking at that. So don't believe your lying eyes out there. And that's where I'm just like, okay, I'm going to call out spin when I see it. So this is not a political channel, but when it comes to finance-related stuff, I'm going to share my opinion because this is impacting everything, including crypto. So how about we just get to the truth? I'm not here to preach politics to you, but we're just talking finance and stuff and the state of the economy and recession stuff. Yeah, I'm going to talk about that. But damn. And so anyway, piece continues. The National Bureau of Economic Research, or NBER for short, is generally recognized as the authority that defines the starting and ending dates of U.S. recessions. NBER has its own definition of what constitutes a recession, namely a significant, this is a quote, a significant decline in economic activity spread across the economy lasting more than a few months, normally visible in real GDP, real income, employment, industrial production, and wholesale retail sales, end quote. Okay, so definitely more than a few months, right? If there's 2 back-to-back quarters, that's more than a few. 6, that's definitely more than a few. And what about the rest of the stuff? I mean, real income? Are we factoring inflation? I hope so, if you're talking about real income. Wholesale retail levels? All this stuff? That's why I'm saying, like, even if you go by the wishy-washy, quote-unquote, definition, which I don't think is a real definition, because it's too subjective, even if you go by that, you'd be hard-pressed to not call this a recession. I'm just saying it's like I see it. And that's why, here's the NBER's website. I don't want to read this whole thing. A lot of it is basically what I just covered. But this is a little fact, frequently asked questions, and the question, what is a recession? What is an expansion? What is a recession? You can read it right there. It's not a definition. They don't have a definition. They just have opinions subjectively, and they state that. And we're like, that's more solid than 2 back-to-back quarters of negative GDP. That's your subjective wishy-washy nonsense, and that's what's supposed to impact the price of my crypto when people freak out. No, thank you. I'm sorry, folks. I am not buying that. That just doesn't seem intellectually honest with me. Now, in terms of specifically what's been happening in crypto, and this is what has made the price of your XRP go down, it has, along with everything else in the crypto space, it's the contagion that I was citing at the outset of this video. So again, here's the headline from the Daily Huddle. $2.2 trillion banking giant Citi says crypto contagion has likely passed. An analyst from banking titan Citigroup is reportedly saying that the crypto contagion that has impacted the industry over the last several months is likely over. In a recent note to clients, as cited by Seeking Alpha, Citi analyst Joseph Ayoub says that the contagion sparked by the collapse of the Terra, which is, remember Luna? Yeah, I'm sure y'all remember. Ecosystem has probably peaked as signs of liquidity stress fade away. The analyst also highlights the recent volatility of staked Ethereum, or STETH for short, STETH, a token meant to be pegged to the price of Ethereum and staked on crypto liquidity protocol Lido. Ayoub notes that crypto lending firm Celsius had over 401,000 STETH as it filed for bankruptcy, which the Citi analyst says may have caused STETH to move away from parity as speculators sold the asset in fear of a liquidation event. On June 24th, the STETH/ETH pair dropped to as low as 0.87 before eventually regaining its peg. According to Ayoub, the recovery of the pair is a sign that, quote, the acute deleveraging phase is now finished, end quote. And folks, have you ever also wondered, like, what are the implications of, like, severe fallout, obviously, in the world of crypto in recent months? Sure. And this contagion, that's the word, it's the buzzword, fine. The concept behind it, I think, rings true. I think the vast majority of us would agree with that. Have you ever thought about what that means for the broader world of finance? Because it's perfectly reasonable to speculate, would it have any sort of notable impact? And I've thought through this, and I haven't really talked about it a ton, but not a huge impact. I mean, that's what I've always thought, for reasons that actually are pretty well articulated here. Check this out. As for fears that the contagion within the crypto world could spread into the traditional finance realm, Ayoub says these concerns are likely invalid due to the relatively small size of the digital assets market compared to the rest of the financial world. The analyst also says that most entities in traditional finance haven't entered the crypto markets due to regulatory uncertainty and therefore won't be affected by the nascent industry's struggles. And here's a quote. We believe most mainstream financial firms are waiting for further regulatory clarity or are still at an early stage of exploring crypto investing. We therefore don't think, by itself, the crypto market travails will spill over into broader contagion, end quote. And so for me, I think that makes perfect sense. The whole time I've been in the space, well, fine. Yeah, happy to see it's much bigger than what it was when I jumped in late 2017. I've been saying all the way up to this point, this asset class is in its infancy, and it's tiny, tiny, tiny. The whole asset class is less than $1 trillion. And it doesn't mean $1 trillion actual dollars flowed in. That means that money flowed in, some did, way less than $1 trillion, and it bumped up prices to get to the point where when you take the calculation of market cap, it results in it being at about $1 trillion now, but that is different. The calculation for market cap is different than how much money actually flowed in. The amount of money actually flowed in is a pittance compared to a roughly $1 trillion market cap. That's just how it works. So that's where we're at right now. So you let me know what you think. Are we in a recession? What's going to happen with crypto? Is the contagion, is all that, is the worst over? I hope so. I don't want more crap to fall out, but I will say we haven't really seen recently a huge collapse of another organization, so hopefully the worst of it actually has occurred at this point. I'm not a financial advisor. You should not buy or sell anything because of anything I say or write. That would be a very, very, very bad idea. Until next time, to the moon, Lambo.